We began our discussion on financial ratio analysis by looking at these financial statements, the income statement, and the balance sheet of advanced technologies. The statement of cash flows, you're required to do it, as I said a while ago. So we went through computing for net operating working capital. Then we computed for total operating capital and investment in total operating capital. Let's have a quick review of the measures that we have went through. First is net operating working capital. We said last time that working capital is usually used as an equivalent to current assets. When we say now net working capital, we're subtracting our current liabilities from our current assets. However, when we say net operating working capital, it means that it's the operating current assets minus operating current liabilities. So last time we looked at the how we measure operating current assets. If we take a look at advanced technologies, we learned last time that current assets has actually five parts: cash and cash equivalents, short-term investments, receivables, inventories, and prepayments. For this company, they only have 4. They don't have prepayments. But the question is, which ones are operating? Which one is part of operating and which is not? We answered this last time. We said that cash, accounts, receivables, inventories, and if there's prepayments, they're part of operating. Only short-term investments or marketable securities is not included in operating. Excuse me guys, sandali lang. Okay, sorry about that. All right, so in order to compute for our operating current assets, we added the cash, receivables, inventories, and excluded short-term investments because that's not part of operating. Okay, so how about operating current liabilities? We look at current liabilities, and there are three. There are three as far as this company is concerned: accounts payable, accruals, and notes payable. Of these three, we said that accounts payable is operating because that's generated from the trade, from the operations of the business. It is generated when a company is given term limits, credit terms by their supplier, in purchasing raw materials or finished goods. Okay, so that's where accounts payable or trades payable is generated. Also accruals. We said that accruals are generated by, these are expenses that have already been incurred, okay, but not yet paid. For example, electricity or utilities like water, telephone. Okay, these are expenditures that's used in the course of the business, in the operations of the business. That's why they're called accruals. The only one that should not be included is notes payable because this is interest bearing. Okay, and we said that if interest bearing siya, operations does not have any control over that. So since operations does not have any control over that, then it's unfair for operations to be assessed for something that they don't have any control of. So of these three current liabilities, only 2 form part of your operating current liabilities. Okay, so we can now compute for our net operating working capital, which is operating current assets minus operating current liabilities. So this one is, okay, it's just the sum of your cash, receivables, and inventories. And then we subtract here the sum of receivable and payables and your accruals. Okay, and we can, of course, just copy the formula to the right because the placement is the same in the balance sheet. So for 2019, it was 646, the NOWC. However, it increased to 796.2 in 2020. So how much was the percentage growth rate? It's equal to the current value divided by the previous value minus 1. So that's the growth rate. Okay. So NOWC, let's make this into a decimal. NOWC increased by 23%. So which means that the company was investing in their operating working capital. Okay. Now, the next measure that we did was we computed for the total operating capital. So this was just working capital. This is now operating capital. So what's the difference? TOC now includes also long-term assets. Okay, so it's NOWC, which is working capital plus the long-term assets. In our balance sheet, we have net plant and equipment. Now, if you recall last meeting, we said that usually when we present the property, plant, and equipment of a company, it's either two ways. You present the at cost value, and then we deduct the accumulated depreciation, the contra asset account, to get the PPE net. Okay, of course, especially for a manufacturing firm, there is usually many types of equipment, many machinery. So this will have to be identified or enumerated in the notes to the financial statements. What are these PPE? What are the different equipment, machinery, maybe land, maybe building? And then what are their individual or corresponding accumulated depreciations? Each asset will have its own accumulated depreciation. So this one, if this was presented this way, then this is just accumulation of all the PPE at cost, accumulation of all the accumulated depreciation, and a cumulation of all the PPE net. Okay. Now, when we compute for the total operating capital, take note, we use the net, okay, net PPE, net plant and equipment. Okay. So if you're given, for example, the PPE at cost, do not use that. Rather, add or be sure to get the net property, plant, and equipment. Okay, so we just copy the NOWC here, and for 2020 and 2019, and then your net PPE for 2020 was, okay, here, 1,000 vis-a-vis 870. Okay, so we just copied that here, 1,000 F32 and G32. Okay, so when we just add this, that TOC, okay, at the beginning of the year or at the end of 2019, it was 1516, okay, and then at the end of 2020, it became 17,692. Okay, so let's just understand what's happening here. So we can see here that management was investing really in operating capital. And we know operating capital is needed in order to support their revenue target, their sales. Because operating capital are those used in the operating performance of the business, whether it's working capital in the form of receivables, inventories, okay, or long-term assets like equipment. So that's needed in order to support the operations of the business. So at the start of the year, January 1, okay, 2020, which is just the same as December 31, 2019. We can approximate this to be December 31, okay, and the value on December 31 or January 1 was 1516.4, and it ballooned to, at the end of the year, December 31, it ballooned to 1796.2. So that means that management has really been pouring their money, investing, okay, in their operating capital, which is good, because this means that the company is really, most probably, the company has this sentiment, okay, that sales will increase or that the market will expand. So they're preparing themselves. That's why they invested 230 or 130 million in net plant and equipment. We can see that from 870, it ballooned to 1,000, which is good because the company is now investing in operating capital. Okay, so the percentage increase in this is the most current value divided by previous minus 1. So that's our growth rate. Okay, let's convert this into there. So total operating capital increased by 18.5%. That's a big jump, and contributed by, okay, so let's just copy this. Okay, Working capital increased by 23%, and then net plant and equipment increased by 14.9%. Take note that this is not determined. This is not additive. Okay, it's not additive. Okay. In fact, since this is more weighted average or equally weighted, so it's not even average. Okay, so we're just looking at the individual amounts here. Okay, so far we have looked into that, and also last time we ended here and said that at the beginning of the year, operating capital was 1516 and management invested 279.8, which is an 18.5% increase as far as operating capital is concerned. Okay, which we commented on just a while ago. We said that this is indicative that management is very bullish about the market. When I say bullish, it means that they're very positive, that they're very confident that the market is going to expand and it will increase. That's the reason why they were investing in operating capital, particularly net plant and equipment. Okay, and also their working capital. Okay, so clear so far? 279.8 was the additional investment in TOC. Okay, we now go. Let me pause for a while, guys. Any questions so far? Any clarifications with up to this point? Any clarifications? Okay.
None.
Thank you. Thank you so much. No. Okay, sige, chat na lang guys kung clear ba, kung yes. Paki-ano naman please, paki-chat naman kung yes, clear naman so far. Thank you. And I really wish everyone would really participate just by even by answering yes or no. Okay. And please don't be ashamed, guys, if you have any questions. This environment is very safe. As you notice, guys, we always treat each question with respect. Okay. And we encourage it. We encourage questions. Okay. Thank you for responding, guys. Okay, let's continue. Now we go to the next part of our lesson, which is the NOPAT, net operating profit after tax. So we want to answer the question, what's the difference between net income after tax and net operating profit after tax? Okay, so this one, the net income after tax, we already have that. Okay, if we take a look at the income statement, that's the one that we have here is exactly your NIAT. Okay, so this is actually your net income, which otherwise this is known as earnings after tax or net income after tax. Okay, so your net income is your earnings after tax because we have already subtracted tax, or your net income after tax. Okay, so we'll pick up these values. Okay, we'll pick up these values. We'll be starting from EBIT. So earnings before interest and taxes, or this is, we know this is your EBIT, or another name for that is your operating income. Okay, so let me just copy that. Our EBIT is, okay, 283.8. All right. So just by way of example, guys, when you say EBIT, that's operating profit. Why do you call that operating profit, this 283.8? Because in order to arrive at your EBIT, we start with sales and deduct all the operating costs. Okay, so this is operating cost excluding depreciation and amortization, and we explained why we exclude depreciation and amortization last time. And here your depreciation and amortization. So your total operating cost is 2616 plus 100. Okay, and we deduct that, guys. We deduct that from your sales, net sales, in order to arrive at your operating profit. Take note, guys, operating profit, which means we haven't considered any financing cost. And that's why we have this, we subtract the interest. Okay, this is now your financing cost. So we segregate the operating profit from the net income. Okay, so let's just get the figures here. Interest we're given at 88. Okay, interest, where's interest expense here? 88. So we're just following, guys, the income statement. So your earnings before tax is simply the difference, okay? And your tax is equal to, okay, the taxable income, earnings before tax times, if you recall, guys, we use the tax rate. Okay, we use the tax rate to represent your 30%. Okay, control enter, 59. Therefore, our net income after tax is simply the difference between your earnings before tax and your tax. Okay, so let me just increase this by 1 decimal place to just to be consistent with the income statement above. All right, so that's it, guys. We just copied this. Net income after tax is generated by your operating profit, less interest, less tax to get your net income after tax. Now, how about your NOPAT? Your NOPAT is net operating. Take note, guys, operating. Again, guys, we have to exclude any financing expenses. Okay, so NOPAT. So let's copy. Yeah, let me just copy it here. Okay, because it's still the same. Okay, 283.8. Same EBIT. Now interest, guys. Okay, interest. Now what will be the interest if you're looking at NOPAT? And the answer here is that, okay, when we're computing for the net operating profit, we will not deduct interest expense. Why? Because interest expense is a function of financing, and we're looking at operating. Now, it will be unfair to charge operations with interest expense when they're not responsible for that. Okay, for purposes of example, let's say that the finance department borrowed, let's say for purposes of example lang, no? 1,000. In this case, that's 1 billion because these are in millions. And then the interest rate is, let's say the interest rate, okay, so let's make this as 10,000. And then with the interest rate of 10%. So the interest rate will be 1,000, okay? 1,000 for the whole year. Okay, if the interest is 1,000, then if we deduct from your EBIT to 83.8, the 1,000, then that will already wipe out all your earnings. Diba, guys? Kung 1,000 to, if this is 1,000, then wala na. Wiped out na, guys, yung ano natin, yung earnings before tax. Wiped out na yung earnings natin because of this 1,000 interest. And it's unfair, guys. It's unfair to charge operations with the interest expense, as I said a while ago, because guys, operations is not responsible for incurring interest. Okay, so we're computing for NOPAT, operating profit, and we'd like to assess operations based on what they're responsible for. Okay, so we will assume that the company has no interest expense because we're computing for operating profit. So we just subtract. Okay, so notice, guys, notice that our earnings before tax, our taxable income, will be the same as your EBIT because we're not subtracting any interest. Okay, so we multiply this by the interest expense times the tax rate. Not the interest expense, but rather the tax rate, which is 30%. So we have now 85.1, the tax. And therefore, our NOPAT is the difference between these two. Okay, so our net operating profit after tax is 198.7. And it will always be higher than your net income after tax, especially if the EBIT is positive. Okay, then why is that so? Because we are not charging operating profit with interest expense because that's not within the control of operations. Okay, now you might think, guys, that since we did not deduct 88 to compute for the net operating profit, then shouldn't the NOPAT be higher than the NIAT by 88? Let's see, guys. If I subtract the NOPAT minus the net income after tax, I'm only getting 61.6. Now, why is that? Why not 88? Why not 88? Because, guys, if you notice, yung tax ng net income after tax was much smaller than the NOPAT. Okay? Because there was a higher taxable income for NOPAT, then the tax was higher. So the difference here is this one. The difference is 26.4. And this, if we add this, guys, this accounts for the total 88. Total 88 interest expense. Okay, so what does this tell us? Okay, number one, NOPAT, if the EBIT is positive, NOPAT will always be higher than your net income after tax. And does this favor operations? Yes. Because if we're going to assess operations, if we were operations, guys, we would rather want to have a report that our operating profit is 198.7 vis-a-vis 137.1. Siyempre, mas maganda yung papel natin dito, di ba? Mas maganda yung assessment natin sa atin ito, yung 198.7 versus 137.1. We are assessed, guys, by a higher figure, which is good. Okay? Now, back to my question, why is the difference not 88? Because, guys, the use of interest provides a leverage. It provides a tax savings. How much is the tax savings? 26.4, this one. So notice here the tax is 85.1, here the tax is 58.7. So the use of debt, guys, remember if I mentioned to you before, the use of debt actually is a lever. When you say lever, it lifts up, okay? It lifts up operating performance based on reduction in tax. Okay? Is that clear so far, guys? Okay, so when we go to the discussion of leverage, guys, we'll explain this in greater detail next time. Okay. Suffice it to say, guys, that the use of interest provided the company with a tax savings of 26.4. However, guys, the NOPAT will be still higher. By how much? It will be what? It will be the interest, guys. So let's take a look at what happened to your interest. Okay. So this was interest expense in 2020, 88. So not all of this became the advantage of NOPAT over net income after tax, because this was divided into the tax rate, which is equal to 30%, and 1 minus tax rate, which is 70%. Okay, so 30% of 88, okay, of the interest expense was the tax savings, 26.4. So therefore, the advantage of NOPAT over net income after tax was just 70% times the interest of 88, which is now 61.6. Okay, this was the advantage of net operating profit after tax, since we're not charging operations with the interest expense. So here it's 0. But then again, guys, just to explain, the difference between your net income after tax and your NOPAT is not 88. Okay, because the 88 has to be deducted with the tax savings of 26.4. So net advantage of NOPAT is just 1 minus tax rate times the interest expense. Okay, so let me pause for a while, guys. Is that clear? Is that clear? So if you're given the interest expense and the tax rate, you know how much will be the advantage of the NOPAT over the net income after tax. Okay, good. Thank you so much for your feedback. Okay, so we can directly compute for the net NOPAT. If we know the net income if you know the EBIT, guys, just reduce it by the tax rate to get your NOPAT. So that's why we have this formula. Okay, this one. So our NOPAT is simply your EBIT, okay, and then we subtract the tax. So let's compute for 2020. We know the EBIT, guys. Okay, and then let's just use the figures here so that we can copy it to the left. EBIT is this one. Okay. All right. Then we can copy it to the right here, and then we can use the formula. It's EBIT times the tax rate. Tax rate. Control enter. And then this one, copy this to the right. Okay, therefore, our NOPAT is simply the difference between, okay, wait, sorry, this is wrong. Apologies. Our tax rate, so we just use the tax rate, sorry. Tax rate at 30%. Copy this. Okay, therefore, our NOPAT is equal to our EBIT times 1 minus the tax rate, which is this one. Okay, 1 minus the tax rate. Copy to the right. And add 1 decimal place here, add 1 decimal place. Okay, so we can easily compute for the net operating profit after tax. Again, if we know the EBIT, we just subtract the effect of the tax rate on the EBIT. Okay, so it's EBIT times 1 minus tax rate. So that's EBIT times, in this case, that's 70%. Okay, any questions? Guys, paki-chat naman kung clear yung pag-compute ng NOPAT. 198.7. Okay, so tama, ano? 198.7, 198.7. Okay, thank you. How about the rest, guys? Okay, good. Thank you so much. Appreciate, guys, your responses. I'm happy about it. It's an indication that you're still there, okay, that you're listening. Okay. All right, so let's move on, guys. Okay, thank you. Okay, free cash flow. Okay, let's define first free cash flow. Okay, let me just write that free cash flow. Okay, so let me just follow this. Free cash flow is the amount of cash flow available for distribution to investors after deducting cash flow requirements for operations. Okay, so this is the definition, guys, of free cash flow. Free cash flow is the amount of cash flow, okay, available for distributions to whom? To investors. Now, we have been talking about investors, guys. But who are investors? We say that investors could be the creditors, the one where the party, the company, where the company borrows funds for, creditors, and also shareholders. So those are our investors. Okay, so we say that free cash flow, that's the amount of cash flow that can be used to distribute to investors, either creditors or shareholders, after we have earmarked or we have set aside the cash flow requirements for operations. Siyempre, mauuna yung operations. No? Okay, so let's identify 5 potential uses of free cash flow. Okay, if they're used for investors, what could be the use of them? Examples. Anyone? Let's identify 5 uses of free cash flow. Anyone can answer? Any volunteer? Any guess? What's your idea, guys? Based on our definition, available for distribution to investors. And our investors are the creditors and shareholders. Okay, Robert? Yes, thank you.
Sir, dividends po.
Sorry?
Dividends, sir.
Dividends, yes, thank you. Because that's for shareholders. So, lagyan natin dito yan, ha? Let's put that here. So, this is for distribution of dividends. Of course, we know dividends are distributed to shareholders. Okay, thank you, Robert. That's correct. Okay, how about the rest, guys? Any other answer? Okay, Shello, please.
Acquisition, sir.
Sorry, acquisition.
Acquisitions po.
Acquisition of what?
Acquisition of assets po, sir.
Assets. Okay. So let's, thank you, Shella. But let's clarify that. Kasi assets, ang assets kasi pwedeng operating assets yan, di ba? Yung operating assets, that's already taken care of here after deducting cash flow requirements for operations. Okay? So ito guys, distribution available for investors. Ibig sabihin, non-operations. Okay, so let's accept Shello's answer pero i-qualify lang natin. So this is used for investments in non-operating assets. Generally for non-operating assets. Okay? So it can be, for so long as it's non-operating. Kasi pag non-operating, that will not form part of free cash flow. That's why it's called free cash flow. It's already free because we have already invested in the operations of the business. Okay, thank you, Shallow. Okay, any other answer, guys? Yes, Abigail?
Paying interest to the debt
Yes,
holders.
correct. Thank you, Abigail. That's correct. So this is, it should be payment of interest. Remember that interest payments are for creditors. Okay, so that's one use of free cash flow. It's for payment of interest to creditors. Okay, who else, guys? Or what else? Yes, Abigail, is your hand still raised?
Repaying debt po, sir.
Okay, thank you, Abigail. So that's the payment of principal. Okay, debt is for payment of principal. Okay, so remember kasi pag debt, guys, either interest payments or principal payments. Okay, thank you, Abigail. Okay, how about one more, guys? Any more use of free cash flow? Okay, yes, Abigail.
Sir, pag-repurchase po ng stock.
Okay, that's correct. Thank you, Abigail. That's correct. So it's what we call, but we did this before, buyback, no? Buyback shares of stocks, or we call this the treasury. Treasury stock or treasury shares. Okay, generally, guys, these are the uses of free cash flow. Okay, and it's outside cash flow requirements. Kasi di ba yung cash flow requirements, yun yung working capital and long-term assets used for the operations of the business. Okay, so how do we now compute for free cash flow? We can easily compute for free cash flow by looking at the NOPAT, operating profit after tax, and then subtracting from there the cash flow requirements for operations. Okay, so let's do this. So the operating profit after tax for 2020 was this, 198.7. We have already computed for that. Okay. Let me just increase it to one decimal place. Now, how much was net investment in TOC? We already computed that before, guys. This one. Okay, we said that at the beginning of the year, the operating capital was 1516. At the end of the year, it was 1796. Therefore, the company invested in operating capital around 280 million. So that's our net investment in TOC. So let's copy that to 79.8, which is now the cash flow requirements of operations. All right. Therefore, our free cash flow is, if we subtract this, is equal to this minus this. Okay, we get an answer that's negative. And let me just edit this a bit, format this. Okay, so it's a negative 81.1. So this begs the question, is a negative free cash flow good or bad for the company? That's the question. Kasi negative yung free cash flow, ano? Ano kaya yan? Okay kaya yan? Is that okay? Is having a negative free cash flow a good indicator? Okay, any idea, guys? What do you think? Any suggestions? Okay, we have here some chat. Okay, so John, no. Abigail, no. John, would you like to clarify bakit kaya no? Would you like to elaborate?
Is it because the business is spending more than what it makes?
Okay. So mukhang maganda yung answer nila, no? Is it because the business is spending more than it makes? Okay, may point, no? Kasi ang NOPAT natin 198 tapos nag-invest sa operating capital ng 279.8. Okay, that's a very good answer, no? But let's just clarify that kasi let's see. Abigail, how about you? Why did you answer no?
Sir, I think it indicates that the company is not like able to generate sufficient cash to support
Okay.
the
Okay,
business.
yeah. Good answer, no? Okay, good answer. Medyo related din kay no, kay what John mentioned. Okay, and also Shello. Also Shello agrees with the answer no. Bakit Shello? Why are you answering no?
Building up from what Abigail mentioned a while ago, kasi going back to the definition po of free cash flow, di ba ang nade-deduct pa lang po from that one is the operating expenses.
Yeah.
Pero aside from the operating expenses po kasi there are other expenses that a company should take into consideration.
Okay.
And once the free cash flow is negative na po, that means that there is insufficient fund na po to be able to pay for those expenses outside of the operating expenses po.
Yeah, okay. All those three answers, guys, are very valid. Okay? Tama yung mga answers na yun. Okay? Now, let's just clarify that a bit, no? Kasi medyo ticklish yung question na to, no? Kung ang negative free cash flow ba, good or bad for the firm. Now, we're going to take a look at this from a different perspective. Okay. Ano ba yung causes ng free cash flow na negative? For one, guys, let me ask you first one thing. Is it possible to have a negative NOPAT? Kasi dadalawang items lang naman to, di ba? NOPAT at saka net investment in TOC. Okay? Is it possible to have a negative NOPAT? Yes. It's possible to have a negative NOPAT. Okay, how? If the EBIT is already negative, okay, then of course, guys, if you multiply it by 1 minus the tax, the NOPAT will be negative. So the NOPAT will be negative in the first place if EBIT was negative. So when will we have a negative EBIT? When your sales was not able to support the operating costs, no? We'll have a negative EBIT if your operating cost is greater than your net sales. So negative kagad yung EBIT nun. And negative EBIT, guys, results into a negative NOPAT. A negative NOPAT will definitely result in a negative free cash flow. Unless, negative. Kasi imamanage natin to eh. Always, guys, always. Okay. So if we have to clarify, guys, what is the cause of the negative free cash flow? If the cause of the negative free cash flow is due to a very low NOPAT, a negative NOPAT, in fact, okay, it's caused by a negative NOPAT, then we say that the negative free cash flow is bad for the firm. Okay? Kasi negative na kagad yung NOPAT eh. Or if it's a low NOPAT. Now, when it's low, we will have to compare that with the NOPAT of the direct competitor. Kasi kunyari, when you say direct competitor, almost the same operations, no? Almost the same level of operations. If, let's say, the NOPAT of the competitor firm was 300 in this case. So dito 300, no? Si competitor. Tapos tayo 198 lang. So ang free cash flow niya positive, tayo negative, no? Kasi ang net investment, let's assume na pareho yung net investment, 280. Then we're having negative free cash flow, they're going to have positive free cash flow. In that regard, guys, then very bad yung negative free cash flow natin. Okay, let me write that, no? Kasi baka na-confuse kayo dun sa example ko, no? So let's assume, guys, that si competitor natin, no? again, babalik tayo sa benchmarking nito, no? Competitor had a NOPAT of 300. Okay, let's say for purpose of example, almost the same level of net investment. So they will have a free cash flow of positive 20 as against negative 81 sa atin. So in that regard, guys, our NOPAT was very, very low compared to our competitor. Okay, so that this indicates this is indicative that our free cash flow is really bad because we are not able to generate enough sufficient operating profit. Okay. But for purposes of example, sabihin natin at par yung ano natin, at par yung NOPAT natin. Okay? Then is a negative free cash flow really bad? Not necessarily, guys. Not necessarily. Why? We have to look at this because free cash flow is also needs the input of the net investment in TOC. Okay. If we're going to analyze further, guys, let's take a look at what happened to the firm. If you notice TOC, the firm was investing heavily in working capital. From 646, it became 796.2, which means additional receivables, which means additional sales. No? In fact, the sales increased. This one here, from 2,850 to 3,000 or 3 billion. So there was this divided by this minus 1, there was a 5% increase in sales. Okay, so sales was increased by 5%. And the company, the perception of the company is that most probably sales will be growing over the next years. Okay, the demand for the product will be increasing. They'll have a greater market share. Okay, of course, I'm only deducing. I'm only guessing. We don't have the whole picture, but that could be the scenario. That could be the forecast of the company. That's why they were loading in working capital and also in property, plant, and equipment. Okay, so that was the cause why there was a great increase in investment in TOC. Now, if the cause of the negative free cash flow is primarily due to the company loading more on its assets, then that means that this is a good, quote-unquote, good problem. Okay, so a negative free cash flow is not automatically bad for the firm. If the reason, that's why, guys, we have to investigate further. Okay, we cannot just take this at face value. We have to compare this with the competitor, and also we have to look at this in the context of the nature or the quality of these two items here, the NOPAT and the net investment in TOC. As from the limited information that we have, we can say, guys, that it looks like that the company was really loading on its working capital and operating capital. Now, is that important? Yes, of course, guys, because the operating capital and the working capital is the one that will generate sales for the company. Those are the assets that you need in order to support your forecast sales. Okay? Imagine, NOWC, guys, involves inventories. If the company was not loading on its inventories, then what can it sell, guys? What can it produce? So we can see here that there was a marked increase, okay, an 18.5% increase in the operating capital. Okay, we can only guess that the company was preparing for increase in sales in the next few years. So the company was positioning itself for incremental sales or increase in market share or increase in the demand for the product of the industry. So in that regard, guys, we can say that the free cash flow, the negative free cash flow, is a good thing because the company was preparing itself for the likely increase in demand, likely increase in its market share, likely increase in the growth in the industry. Okay, so we cannot just conclude, guys, that a negative free cash flow is bad. It's not like net income. If the net income is negative, then we can deduce, guys, that that's bad because the sales was not sufficient in order to support the operating cost and the other financing costs. Okay, so take this with a grain of salt, guys. Yung negative 81.1, we have to act like a detective and examine further, investigate where was this coming from. And apparently, guys, we saw that the company was increasing its working capital and its total operating capital, which is a good sign. Okay, in that regard, that's a good sign, guys. And again, guys, reminder lang din again, it's best really to benchmark this also with a direct competitor. Okay? Kasi here we're only benchmarking over time. Okay, against time, it appears to be good. But we have to compare this against the direct competitor also. And if we have industry figures, also the industry figures. Okay. So I hope that this is clear, guys, the free cash flow. Okay, we have around 35 minutes and our target, guys, is to finish these questions here. So may I continue now, guys? I hope clear yung pag-explain ko dito ng free cash flow, ng negative free cash flow. As we said a while ago, it does not automatically mean that the company is performing bad. We have to look at the quality of the operating profit and the quality of the investment in TOC. Okay, so it will take, guys, number one, it will take of course, if we're working for the company, if we're working with finance, at our disposal are other information which we can use in order to assess the quality of the investment in TOC. Okay, in this case, we're only outsiders. We're outsiders actually. We're just assuming that we're insiders. So we are just what we call theorizing or postulating, okay, about what really is happening in the company. Okay, so I hope that's clear, guys. Okay, let's go now to ROIC. Now, as to the question, did the management create value for, so let me write that, did management create value for the shareholders? Because we say that this is the main objective. Shareholders. Was value created for shareholders? Now, that's a very valid question, because we say that that's the main objective of a business. Okay, so good thing, guys, we can answer this question using some metrics. And the metrics that we're going to use to measure this is ROIC, return on invested capital. Okay, this one. We can also make use of MVA, market value added, and EVA, economic value added. Okay, so these are the three measures that we're going to look into in the next 30 minutes. Okay, and that will end our session for today. Okay, first is ROIC, return on invested capital. Okay, it's best to appreciate this, guys, by understanding the story behind. Okay, so let's answer some basic questions. Okay, so the basic question is, at the beginning of the year, so January 1, no? January 1, 2020. How much capital, operating capital, was given to management? Okay, so capital, the operating capital given to management was around 16 million, 16.4. Okay, so where did I get that? I got that from total operating capital. Okay, ito yan, no? Ito yan. Asan na? This one, 16.4. And we're using beginning of the year. Okay? Okay, take note, guys, I'm not using end of the year. So the story is, okay, January 1. Investors provided to management a total operating capital of 16.4. In our context, that's 1,516 million. Okay, what did management do with that? Okay, what did management do with that? So from January 1 up to December 31, okay, management was able to generate an operating profit, which we call NOPAT. No? Diba? Yung net operating profit after tax. Operating profit yan. Okay, so how much was operating profit which management generated for the firm? How much was it? It was 198.7, di ba? So management generated 198 million, 198.7 million. Okay. So this is our operating profit. And management was able to do this based on an TOC of 1516.4. Okay. So what's value created? Easily, guys, we can now compute for what we call ROIC. Because the formula for ROIC is this one. Here. The formula is NOPAT divided by TOC beginning capital. Okay, so we know NOPAT to be, just get this, 198.7. The beginning capital we know to be 1516.4. We just get this from here. Okay, 1516.4. Okay, so let's just increase this by 1 decimal place. Therefore, guys, oops, wrong position. Okay, therefore, our ROIC is the NOPAT divided by how much capital was given at the beginning. Okay, so here we know that ROIC, return on invested capital, is 13.10%. Okay, now that's why this is very important, because we can actually compare this with other companies. Okay, so for example, let's assume, guys, that there's this competitor company which generated, let's say, they generated a NOPAT equal to, let's say, 500 million. So which performed better? Our company or this company? What do you think, guys? Our NOPAT was 198.7. Their NOPAT was 500. Which do you think performed better? Anyone? So this is our competitor. This is our company. We generated an operating profit of 198.7. Our competitor generated 500 million. So which is the better company, guys? Any guess? Any answer? Would like to volunteer? Any suggestion, guys? May ano na ba? May may nag-raise ng hand? Wala pa? So I'll give you a minute to think about it, guys. So the scenario is that we were able to generate operating profit of 198.7, while our competitor generated a operating profit of 500 million. We were only 198.7 million. So did our competitor perform better than us? Okay, so we have a chat here. Okay, John, could you kindly explain your answer?
I think, sir, we need to know also, sir, the total operating capital, sir, to know which one performed better.
Yes, okay. Thank you, John. That's very good. Yeah, that's correct, guys. That's correct. Kasi we can't just base it on the 198.7 and the 500. Okay, what if this company had an operating capital, okay? If this company had an operating capital of 10 billion, okay, 10,000 million. Diba? If you get the ROIC of that, pag i-compare natin yung ROIC natin, that this is 500, okay, 500 divided by the 10,000 million. Okay, so this is only 5%. Okay, 5% only, while we were able to generate 13.10%. Okay, So the lesson here, guys, is notice the fallacy of just comparing one figure. That's why we have ratios. Okay, so we were able to generate 198.7 million NOPAT based on a given capital of 1516. Our competitor had, yes, 500 million, but they have a given capital of 10,000 million. So that's 10 billion. Okay. As to our 1.5 billion, they had 10 billion. So they were given greater amount of POC. And yes, they generated a greater, algebraically greater amount of NOPAT. But on a per peso investment of TOC, we fared a lot better than our direct competitor. We had 13.10%. They only had 5%. Okay, which means that for every 1 peso of operating capital provided to them, they were able to generate a NOPAT of 0.05, 5 centavos. While on the other hand, we were able to generate 13 centavos for every peso of operating capital provided to us. All right? Okay, so, but that doesn't answer our question yet. Okay, focusing on our firm, 13.10%, did we create value for the shareholders? What do you think, guys? 13.10%, okay ba yan? Could we say that we created value for the shareholders? Any idea, guys? Any suggestion? Does this tell us that we created value for the shareholders itong 13.10 na to? Is this positive, guys? Kasi pwede mo maging negative ang ROIC. Yes. Kasi pwede maging negative ang NOPAT. If NOPAT is negative, then automatically our ROIC is negative. So if our return on invested capital is negative, then that means we destroyed value for the shareholders. So that means we're losing. If this was negative, we're losing 13 centavos for every 1 peso of operating capital provided by investors. Okay, but since this is positive, guys, so did we create value for the shareholders? Any volunteer, guys? Answer? Did we create value for the shareholders? Any guess? Was value created? Can you hear me, guys? Baka nawala na yata ako. Can you hear me? Hello? Can you hear me? Okay, so I'm still here. Okay, thank you. Thank you, Angeline. Okay, so you can still hear me pala, no? Okay, so what's the answer, guys? What do you think? Is 13.10 indicative that the company, that the management was able to create value for the shareholders? Okay, the answer, guys, is, okay, may nag-volunteer na answer. Let's see. Okay, John. Yes, John, why?
I'm not sure, sir. Maybe because it's positive, sir.
Yeah, okay, thank you. Thank you, John. It's okay, guys. No? I was asking for your opinion and John gave a very good opinion. Yeah, kasi positive to di ba? 13.10. Because I said a while ago that it's possible for this to be negative. NOPAT can be negative, but TOC beginning cannot be. So this will always be positive, the TOC. But NOPAT can be negative. So if NOPAT was negative, then ROIC will be negative. Then that means the company destroyed value. Okay, now this is 13.10, it's positive. So what's value created? Okay, let's just enforce the answer of John. No? The answer, guys, is that a positive ROIC does not necessarily indicate that value was created. So how do we now answer, guys? How do we now answer this? The answer is that Okay, this has to be compared with, remember guys, this one? This has to be compared with our WACC. And we're told that in line 128, our WACC is 8%. 8%. So our decision rule is if the ROIC is greater than the weighted average cost of capital, then value was created. Okay, so we have here 13.10. That's our ROIC. It's greater than 8%. Therefore, management was able to create value for the shareholders based on the computation of ROIC. Okay, clear so far, guys? Clear so far? Okay. Okay, thank you. Thank you. Salamat. Salamat sa responsa. Okay, now, we said that there are two other measures that we can use in order to, thank you, John, thank you, Ben. We can use in order to determine if value was created. Not only ROIC, but we can use MVA, which is market value added. Okay, so let's now, let me just at the onset tell you that ROIC, MVA, and EVA will always give us the same answers. What do I mean by the same answers? If based on ROIC value was created, then MVA will also show that, and also EVA. These three measures will always be consistent with each other. Okay, so let's now go to MVA, market value added. How can we compute for market value added? Okay, so we have additional data here. The stock price was 65. The number of shares is 15,000 thousands. But we have to convert this into millions because our data is in millions. In millions to dapat, no? Kasi yung balance sheet natin, income statement in millions. So ilang millions ba yung 15,000 thousand? So since this is in thousands, in order to convert it into millions, we have to divide this by 1,000. Okay, so this is just 15,000 divided by 1,000. Okay, so this will now be in millions. Okay, in fact, nakasulat na pala dito, no? 15 million shares outstanding. Okay, so tama to guys, 15,000 kasi 15,000 siya. When just to be consistent, this should have been expressed in millions to be consistent with the balance sheet income statement figures. And we're given the WACC at 8%. Okay. All right. So let's first now compute for the market value added, and we have the formula here. The formula here tells us that we have to compute for the market value, or we call it market capitalization. Okay, so that's market capitalization. Shortcut ko na lang, market value. Market. Let's first compute for the market capitalization. So I'm going to insert here, okay, insert. I'm going to insert this one, Control-C, Control-V. Okay, so we know that the stock price, currently, the stock is selling at 65 pesos in the market. And how many million shares does the company have? It has 15 million shares. Okay, so we can now compute for the market capitalization in millions. So how do we do that? We just multiply how much is the stock price multiplied by the number of shares outstanding. So we get here 65 times 15. So we have now 975. Okay, let's add one decimal place. All right, 975. So that's the market capitalization. So how do we compute for market capitalization? Okay, just get the stock price. How much is it selling now in the market? Okay, and then how many shares outstanding? We're given that there are 15 million shares outstanding, and we're using millions because our balance sheet and income statement figures are in millions. So just to be consistent. Therefore, our market capitalization is 975 million. Okay. Now, what we're going to do is we're going to compare with this with the how much is the equity as far as the balance sheet is concerned. So the book value versus the market value. The book value, guys, we can get it from the balance sheet. So let's go to the balance sheet. And the book value is here, this one. So common stock, guys. So malito, ano, dapat 5 million shares lang to. So could you kindly correct this? Sorry about that. So this is my mistake. This is typographical error. Common shares is 5 million shares. Okay. All right. Common stock shares. Common stock. The value of the common stock is 130. The value of retained earnings is 810. So we need to combine this to get the total common equity. So this represents the book value of the equity. So let's copy this. So this is equal to the book value is 940. There. Okay. So we can now compute for the market value added by subtracting the market value from the book value. Okay. All right. MVA is 35 million. So did management create value for the shareholders? Yes. What's the decision rule? If market value added is greater than 0, then value was created for shareholders. Okay. Since the market value is positive, the market value added is greater than 0, then value was created. So here we're comparing the market capitalization, which is 975, which we obtained by multiplying the stock price with the number of shares, and then comparing it with the book value of the equity. So 35 million. So which means value was created. Since mas malaki yung market value ngayon, yung appreciation ng mga investors sa market versus what was recorded in the balance sheet. Okay. Capital appreciation yan, guys, no? That's capital appreciation. Okay. So as far as ROIC is concerned, 13.1% greater than the WACC of 8%, value was created. As far as MVA, market value added, greater than 0, then value was created also. Lastly, guys, economic value added, and we're going to look at this in 2 ways. So what's economic value added? Okay, may kwento na naman to, guys. Na? Ulitin natin yung kwento. Okay, so let me repeat the story because it's easier to understand, guys, yung mga measures na to if we know what's happening here. Again, guys, January 1, 2020. What happened? Okay, management was provided with a capital of 1516.4, diba? Ito yung TOC natin, total operating capital as of January 1, 2020. Management was given 1.516 billion or 1516 million. Okay, now, who gave this capital? This capital was provided by investors. Alam natin yan. Investors, in the creditors or shareholders. Okay. Now, from their perspective, guys, free ba to? Is there investment in the company, whether it be creditors or shareholders? Is this amount, the total operating capital, free? The answer is no. This is not free. Okay? Bakit hindi free yan? Not free. Why? Because creditors, shareholders expect something in return for this. Okay? So this is not free. In fact, from your economics, you learned that there's such a thing as opportunity cost. Okay, ano yung opportunity cost? Okay, this is the amount, the returns by which these investors are willing to let go of their returns just in order to invest in the company. So ibig sabihin nito, guys, the investors could have placed or parked their money elsewhere and would have earned maybe greater than what Allied Dynamics is earning now, no? Or earning for them. So what are we doing here, guys? Okay, we're going to charge management for the use of this capital. Okay, since hindi free tong OC na to, okay, we're telling now management, okay, we're going to provide you with 1516.4 of total operating capital, but we will charge you for the use of that. And what's the charge for that? Andito sa formula na to. Ito. So the TOC beginning, which is 1516.4, we're going to charge management by the amount of WACC. Yan. Okay, i-charge natin sila ng WACC. Kasi hindi libre to eh. No? What's the cost of acquiring funds for the company? It's equal to the WACC. So since this is not free, we're going to charge management with the use of that. Okay, so tingnan natin, no? Let's compute now for this. Di pa. Let's complete the story, no? So from January 1 hanggang December 31, yung operating period na yan. Anong performance ng management? They were able to generate, okay, an operating profit of 197.5 billion. Okay. This was their operating profit, no? Your NOPAT. Nag-generate sila nito, 197.5. Ang question, okay ba yan? Okay, is the 197.5 okay? Well, we have to see. How was this generated? They were given 1516.4. So the question is, this was not free, no? So we're going to charge management for the use of that. Okay, so let's do this, no? Okay, so NOPAT, guys. Let's get NOPAT for 2020. NOPAT was net operating profit. I'll just copy it here. 198.7. Okay, I'm sorry, guys, I got the wrong figure here. So correct natin to. It was not 197.5, it was 198.7. Okay, so this was our NOPAT for 2020. Okay, so $198.7. Okay, then what are we going to do? So let's insert here, guys. Insert tayo dito. Insert. And another insert. Mag-insert tayo ng dalawang rows dito. So this was profit, no? Operating profit. Now, let's get the TOC beginning. Magkano yung capital na binigay sa atin at the beginning of the period? Okay, take note, guys, we're using the beginning of the period figure. The beginning of the period figure is 1516.4. Okay, 1516.4, and we're going to charge the company for the use of that with the WACC. The WACC being 8%. There. 8%. Okay. So we're going to charge management with the use of this capital, and we call it guys. So ang tawag diyan, pag pinabayaran natin yung management ng paggamit ng operating capital, we call it the charge on the capital. Charge on the total operating capital. Okay? And how much was the charge on total operating capital? It was whatever the TOC beginning is multiplied by the cost of using that capital. So 121.3. Okay, therefore, guys, we can now compare. Okay, the company generated NOPAT of 198.7 and they were charged 121.3. Therefore, okay, ang tawag dito, guys, economic value added. Okay, notice that this is not net income. One good thing about EVA is that it does not consider the total operating capital as free. Unlike yung ibang measures, guys, ang net income after tax, hindi nila kino-consider yung capital charge. In EVA, we consider capital charge. And capital charge is 121.3. Why is that so? The 1516.4 beginning capital is not free. So we're going to charge management for the use of capital, and it turns out to be 121.3. And if we compare the profit generated, operating profit generated to the charge on the capital, it's 77.3, it's positive. So for EVA, if EVA is greater than 0, then value was created. So that's our conclusion here. Since EVA was positive, 177.3, then value, the management was able to create value. So on all counts, guys, sulat natin dito. Ubusan na ako ng space dito. So let me just write it here. EVA greater than 0, then value was created for shareholders. Okay, pause muna ako, guys. Clear yung concept ng economic value added. Okay, take note, it's economic, no? Hindi accounting value. Kasi mag-iba yung konsepto ng accounting. Sa accounting, we don't use capital charge. Okay, we'll just assume that management was given this operating capital. Sa economic value added, guys, we are charging management with the use of this capital. Diba? Kaya nga ito, yung capital charge 121.3. No? Okay, so, nineto natin, how much was value added to management? Okay, it's no pat minus the charge on capital. All right, let me pause for a while. Clear ba so far, guys? Paki-chat naman please kung clear. Or if you need me to repeat the explanation, I'll appreciate your honesty, guys. Clear ba so far? Okay. Okay, thank you. Thank you so much, guys. Thank you for your feedback. Okay, yung iba, sana mag-feedback din yung iba, no? Para medyo alam ko kung na okay so far yung explanation natin. Okay, thank you. I appreciate that. Okay, quick review, guys. ROIC, sabi natin, ROIC as a measure is computed by NOPAT divided by the beginning capital. And if the ROIC is greater than the WACC, then value was created for shareholders. And if the ROIC indicates that value was created for shareholders, then that will be the same for MVA and EVA. Okay? They will yield the same results, no? Either value creation or value destruction. Okay, one last thing, guys. For economic value added, there are two ways to do this. Number one, no pat minus capital charge, diba? So we had to charge management for the use of the operating capital, the beginning. So the charge is multiplied that by the weighted average cost of capital. Okay, now there's another way to compute for EVA, okay, based on ROIC. Okay, so let's compute for EVA, economic value added, based on ROIC. Okay, so we're going to use ROIC and we're going to compare it with WACC. Okay, how much was ROIC? We have the figure, guys. ROIC is equal to, okay, so let's use this, 13.10%. Okay, then how much was WACC? WACC was 8%, no? Okay, so I'll give you guys 2 minutes. Okay, can you come up with a computation for EVA based on ROIC and WACC? So we need, guys, to have this. We need to have a result of EVA. Okay, it should also be equal to 77.2. Okay, I'll give you 2 minutes to try to find out paano ba natin kukumpitin si EVA based on ROIC and WACC. Kasi alam natin, guys, that value was created, di ba? So we expect a positive EVA there. Okay, I'll give you 2 minutes, guys. Sige nga. ROIC, tapos yung WACC natin 8%, so mas malaki yung ROIC. So na-hurdle natin yung yung minimum requirement, no, na WACC. So we need to show, guys, magkano yung paano natin nakuha yung EVA. Any volunteer? Any suggested answer, guys? We have a few more minutes. Eksakto tayo, on time tayo. No? Anyone who'd like to venture a guess? Paano kaya makukuha yung EVA based on ROIC at saka yung WACC? Just by looking at ROIC and WACC, we know, guys, that we already created value kasi mas mataas yung return natin dun sa invested capital versus the weighted average cost of capital. But how do we translate that into your EVA, into your economic value added? Okay, just one more minute, guys. Any guess? Ano kaya yun? 13.1% versus 8.0%. Okay, one last minute, guys. A clue. Kung natin yung yung difference nito. So the difference here is we just subtract. No? So that's 5.1%. Kaya natin na 1 decimal place para consistent tayo. Okay, so how do we arrive at the EVA, guys? Isipin lang din natin, guys, na nag-invest tayo. Magkano ini-invest, guys?
We multiply it, sir, with the TOC.
Yes, TOC. TOC what? TOC,
Beginning.
John? Yeah, okay. Yeah, that's correct, John. Thank you. So sabi ni John, TOC beginning. Okay. Our TOC beginning is, we know that to be 1516.4. No? Diba? Okay, so take a look at it this way, guys. Management was provided this beginning capital of 1516.4. Okay, so what did they do with that? They generated 13.1% return. However, the cost was 8.0%. So the net return was 5.1. So they were able to generate a net return of 5.1% based on what was given them, the TOC beginning. Diba? Okay, TOC beginning was 1516.4. So kumita sila, no? And it was 16.4 times 5.1%. Okay, so 77.3, just the same as our WACC here. Okay. All right. So John, please remind me. You get +2 points sa short quiz natin, ha? Thank you for answering that. Okay, that's correct. Remind mo ka para idagdag ko yung +2 points mo dun sa first short quiz natin. Yeah, may comment din si John dito. It's easier to base it on ROIC. The only problem, guys, with ROIC is that we're not able to see how much was the kasi pag ROIC lang, okay, so it's only comparing the 13.1% and 8%. Okay, yun lang makikita natin dito. But the reason why economic value added is computed is because we would want to see the amount, the economic profit of the firm. Okay, ito kasi economic profit yung 77.3. And if we just base it on ROIC, hindi natin makukuha yan, no? So we have to dig deeper and compare this and get the difference and then multiply it by how much was provided to management at the beginning of the period. Okay, so it's already time, guys. Thank you so much. Okay, so John, you get 2 points. Please remind me for adding to add 2 points to your first short quiz. Okay, so thank you so much, guys, for your patience. Maraming salamat. I'll see you next on Monday. Okay, and then again, as I mentioned, guys, may short quiz. Okay, na assignment na short quiz. This will be added to your quiz. You will have to generate the statement of cash flows. And I'll post later, guys, yung video that I created for the class about how to construct the statement of cash flows, okay, using this template. All right. So thank you so much, guys. Have a blessed evening ahead. I'll stop recording.